Welcome back to the deep dive. Great to have you with us.
Good be here.
Today we're jumping right into a topic built entirely from sources you shared with us. We're unpacking a situation that's definitely been making waves in the time market.
That's right. We're focusing on JMART Group Holdings, JMART, and maybe more specifically, getting granular with its major subsidiary, JMT Network Services, or JMT.
And the thing that jumps out immediately, the hook from your sources, is JMT's stock price. It's seen a dramatic fall.
Yeah, dramatic is the word. One source mentioned an 84% drop from its peak in April 2022. What was it? 88.25 baht.
Yeah, down to around 13.8 baht by June 2024. Another source had it at 14.70 baht just on June 7th. Either way, that's quite a slide.
Definitely. That kind of movement screams investor uncertainty. So our goal here, using the materials you gave us, is to figure out what's behind this drop.
Right. Look at the financial health, JMT and the whole JMART group, and explore the opportunities and, crucially, the risks they're facing.
Exactly. And just to reiterate,
Yeah, this isn't investment advice. It's about getting you informed quickly and thoroughly based on these specific sources.
okay, let's get started.
All right, first things first, let's lay the groundwork. Understanding JMT means understanding its origins with JMART, right?
Absolutely. It wasn't always its own thing. JMT actually began life as the internal debt collection unit for JMART.
Back when JMART was mainly selling like appliances and phones on credit.
Precisely. They built up that collection capability internally first.
And then they thought, hey, we're good at this.
Kind of, yeah.
Yeah.
They saw an opportunity. They started offering these services externally, first for partners like AIS, the mobile operator.
Okay.
And then they expanded to handle debt for financial institutions. It was a pretty logical step, building on what they knew.
Which eventually led to the spinoff, JMT Network Services Public Company Limited, listing on the stock exchange.
Yep. IPO'd back in 2012. Price was 4 baht per share then.
But the link is still really tight, even now.
Oh, absolutely. JMART Group Holdings is still the major shareholder. They hold 53.84% of JMT.
So what are JMT's main lines of business today?
Well, there's still the traditional debt collection services, but the big one now is non-performing debt management.
Buying up bad debt, essentially.
Exactly. Buying distressed loan portfolios from banks and others at a discount, then trying to collect. They also have an insurance business and an insurance brokerage arm.
Got it. And the parent, JMART Group, what's their big picture strategy?
They talk about building a synergy ecosystem. The idea is to link businesses across retail or commerce, finance, and technology.
Trying to make 1 + 1 = 3 kind of thing.
Sort of. Hoping the different parts help each other out, cross-selling, shared customers, that kind of synergy.
Okay, let's get into the numbers. JMT's Q1 2024 performance specifically. Because the sources, they paint a pretty challenging picture, especially when you compare revenue and profit.
They really do. I mean, look at the revenue first. Q1 2024 revenue was actually up 18% year-on-year, came in at 1,356 million baht.
All right, 18% up sounds okay, maybe even good. But then you look at the net profit.
And it's a totally different story.
Yeah.
The main source flags a 77% drop year-on-year, net profit down to 418 million baht.
77%. And another source mentioned some brokers were even more concerned, citing maybe an 88% drop year-on-year.
Exactly. That stark contrast, revenue up, profit way down, is why this is worth digging into. Something shifted dramatically under the surface.
So let's break it down. Where did the revenue actually come from? Traditional debt collection income. That actually fell.
It did, down 12.9%. The reason given in the source was simply a smaller portfolio size for those collection contracts.
Okay. But interest and dividend income shot up 40%.
Yeah, that jump came from interest they collected from debtors, but also from loans they made to their joint ventures.
Right. And the profit from their main gig, buying and managing those distressed loan portfolios.
That was down 23%.
Why was that?
The source suggests it might be linked to them, sort of, writing down the value of some debt on their books to make collections seem easier or quicker, which hits the reported profit from those assets.
And insurance income was also down 24%.
JMT apparently said that was intentional, controlling their exposure to high-risk insurance policies.
So a mixed bag on revenue, but clearly the real pain was on the cost or loss side. What drove the profit down so hard?
This is where you see the big hits. Expected credit losses, or ECLs, they surged, up 66% to 189 million baht.
Expected credit losses.
You're right.
That's basically money set aside because they don't think they'll collect, right?
Exactly. And the source ties this huge increase directly to them missing their collection targets on non-performing debt. The tough economy is making it harder to get people to pay.
And their borrowing costs went up too. finance costs.
Yep, up 44% to 137 million baht. Likely due to higher interest rates hitting their loans and debentures, it costs more to borrow money now.
And one more hit profit share from joint ventures was down.
Down 38% to 81 million baht, mainly because of lower profits coming from JK Asset Management. That's their JV with Kasikorn Bank Group, also focused on distressed assets.
Okay, so let's recap that. Revenue up overall, but profit hammered by higher expected losses on collections, higher borrowing costs, and less contribution from a key partnership. It paints a picture of, well, multiple pressures hitting at once.
Yeah, and all amplified by the sluggish economy the sources keep mentioning. Now, looking beyond just the P&L, the balance sheet and key ratios give us another angle on JMT's health.
Right. One number that really jumped out at me was cash. Their cash position dropped quite a bit, didn't it?
It did. Down 49% just between December 2023 and March 2024. Settled around 905 million baht. That's a pretty steep decline.
Yeah. But interestingly, the current ratio actually improved.
That's right. The current ratio measures ability to cover short-term debts with short-term assets. It went from 1.06 times in December to 1.33 times in March.
So even with less cash, they were technically in a better position to meet immediate obligations. How does that work?
It suggests other parts of their current assets might have increased relative to current liabilities, or maybe liabilities fell faster. It shows improved short-term liquidity management, on paper at least.
What about other key ratios for Q1 2024? ROA.
Return on assets was 7.57%. Return on equity, 7.41%. Net profit margin was 30.71%. And debt to equity, or DE, was 0.46 times.
And that DE ratio improved, meaning less leverage.
Correct. The sources noted their total debt actually decreased because they paid back some debentures and loans.
So summing up the financial health picture.
Well, based on these numbers, their operational efficiency, things like ROA and ROE, definitely took a hit compared to 2022, 2023. That reflects the profit pressures we talked about, but their debt management looks better with that lower DE ratio. They managed to reduce their debt burden somewhat.
Okay, so this difficult financial picture, it obviously feeds into how the market sees JMT and brings us back to that huge stock price drop.
Which is the market basically shouting its uncertainty, right, as the sources say.
Let's look at some specific stats from one source. As of June 7th, 2024, price, 14.70 ratio. PE ratio, a massive 1086 times. PVV, 0.8 times. And dividend yield, 5.65%.
Whoa, that PE ratio 1086x, for anyone watching the market, you know that's unusual. It usually happens when recent earnings, the E part, are incredibly low, like we just saw. That just blows out the multiple.
Or it could mean the market expects a massive recovery. Maybe that's the buy-side view.
Could be part of it. The other standout is that dividend yield, 5.65%. That's pretty high compared to the market average. Might attract certain investors.
So given all this, what are the brokers saying? Is there a consensus?
Not really. It's quite divided. As of June 8th, one source looked at 10 brokers covering JMT. It was split. 5 said buy, 2 said hold, and 3 recommended sell.
A real mix, and their target prices reflect that.
Definitely. The average target price was 23.2 MBAL. That's like a 60% upside from that 14.7 OBOBOT, but the lowest target was 16.4 OBOT, only about 11% upside. So yeah, a big range in opinions.
Let's unpack that. The hold and sell guys, what's their main worry?
It really boils down to that Q1 2024 net profit collapse. They point straight at the higher costs, those expected credit losses, the finance costs, and the lower profit share from the JK Asset Management JV.
And they connect it to the wider economy.
Yes, they see the slow economic recovery making all these internal problems worse, hence the caution or the outright sell rating.
Okay, what about the bulls? The brokers saying buy. What's their case?
They seem to think JMART's overall group profit will stabilize maybe around 2 billion baht for the full year 2024. For JMT specifically, they're banking on an economic pickup in the second half of the year.
Believing that higher incomes will mean people can start paying back debt again.
That's the core bet. Better debt payment ability should boost JMT's collections and profits. Plus, they argue the current low stock price has already baked in all the bad news.
So they see it as a potential turnaround play, perhaps undervalued now.
That seems to be the thinking.
And the sources also threw in some AI analysis.
Yeah, Deep Scope AI gave JMT a quality score based on fundamentals of 69 out of 100, which sounds okay. But the technical score was only 26 out of 100, which kind of mirrors the brokers, doesn't it? Fundamentals might have some underlying strength, but the recent price action and technical signals look weak.
All right, let's shift gears from looking back to looking forward. Based on these sources, what are the big opportunities and risks for JMT on the horizon? The backdrop is obviously rising bad debt in the economy.
And that's a real double-edged sword for a company like JMT. On one hand, opportunity. If bad debt growth slows eventually, and maybe the Thai economy picks up in, say, 2-3 years,
And
then JMT could be sitting pretty. They can buy up these non-performing loans, NPLs, at really cheap prices now during the downturn.
stockpiling assets for when times get better.
Exactly. Build a big portfolio of cheap debt now, then work on collecting it when people have more capacity to pay later. That's a potential upside.
And the flip side, the risk.
The risk is if bad debt keeps climbing and the economy stays sluggish, then debtors just can't pay no matter how cheap the debt was bought for. Collection rates stay low, collection takes longer.
And the source mentioned that could force more legal action.
Yes, which is costly, time-consuming, and slows down the whole business growth engine.
Okay, another future item. Spinning off JK Asset Management, the JV, via an IPO. What's the thinking there?
This is a big potential move. The opportunity is that listing JAM separately could make it more agile, give it more independence.
Allow it to raise its own capital.
Right, which could fuel its own growth faster than staying under the JMT Casacorn umbrella.
But JMT gets profit from JAM now. What's the risk?
The risk is JMT loses that direct profit share percentage. And if JAM struggles after the IPO, JMT's income from it could shrink even more.
And the source pointed to another JMART group company as a warning.
Yeah, SG Capital, SGC. The source noted its performance apparently deteriorated after it listed, so it highlights that spinning off isn't a guaranteed win. There's execution risk within the group itself.
That's a really crucial point. And then there was this more structural long-term risk mentioned, demographics.
Yes, fascinating point from one source. Looking at Thailand's declining population. Lost about 170,000 people over 2 years, apparently, and long-term projections showing the population could even halve by, like, 26.
Wow, that's a long way off, but the trend is clear. What's the risk for JMART now?
For businesses that depend heavily on domestic consumption, which is a lot of the JMART ecosystem, a shrinking or stagnant population means the overall market isn't growing.
So expanding aggressively within Thailand just means fighting harder for the same or smaller piece of the pie.
Pretty much. It risks becoming market share cannibalization rather than genuine market growth. The source even offered a personal opinion suggesting that maybe long-term, they need to consider investing overseas in markets with better growth prospects.
Okay, let's zoom out now to the parent company, JMART Group. How did the whole group perform in Q1 2025, according to the consolidated results in the sources?
Well, group revenue saw a small increase, up 2.2% year-on-year to 3,727 million baht.
What drove that? Still JMART Mobile.
Yeah, primarily JMART mobile sales, helped by things like Lock Phone and also government schemes like Easy E-Receipt 2.0.
So top line slightly up, but what about the bottom line for the group?
Similar story to JMT, unfortunately. Net profit attributable to shareholders dropped sharply, down 40.5% year-on-year, landing at 140.3 million baht for Q1 2025.
Another big profit drop. What were the reasons given at the group level?
The sources mention lower gross profit margins because operating costs went up across subsidiaries. Plus, overall selling and administrative expenses for the group increased.
And they acknowledged the tough environment.
Oh, yes. They pointed to the global economy, high household debt in Thailand, slow purchasing power, all the usual suspects impacting Q1.
So what's the group's strategy to cope?
They talked about adjusting costs, improving efficiency, really focusing on scalable businesses like Lock Phone, and trying to boost that synergy across the group, all while managing risk carefully.
Did they get any cash in from investments during the quarter?
They did. JMART received about 530 million baht in dividends from its various investments in Q1 2025. And the plan is to use some of that to pay dividends out to its own shareholders.
Okay, despite the group-level profit drop, the sources did spotlight some areas that are performing well within the JMART ecosystem, some bright spots in Q1 2025.
Definitely. Lock Phone comes up again and again as a key driver. It's seen as scalable, and crucially, they seem to think the NPL risk is controllable because it's managed on a specific platform.
And Sukishi Tino, the restaurant chain, that sounded like a real winner.
Absolutely. Described as having excellent returns, strong growth. It contributed 79 million baht profit to JMART in Q1 alone. Apparently, they hit 85 branches by April.
Wow. What's their strategy there?
Expanding into the provinces, focusing on quality and service and employee motivation. They mentioned quarterly bonuses. They're also building a big central kitchen.
For efficiency and R&D.
Yeah, aiming for capacity to support 200 branches. An IPO for Tsukishi is planned, but timing depends on the market and figuring out the best way to raise funds. Singer was also mentioned positively, described as debt-free regarding debentures, and contributed 20 million baht profit to the parent in Q1.
Their focus.
Quality lending, pushing lock phone, and adding new products to their portfolio.
And SG Capital, SGC. We mentioned the post-IPO risk earlier, but its recent performance sounds strong.
Very strong in Q1 2025, yes.
Yeah.
Net profit was 71.2 million baht, up almost 300% year-on-year.
It's huge. What drove that?
Heavily driven by that high-yield lock phone portfolio, it had apparently hit 5 billion baht in accumulated loans by April. It's seen as a really key growth engine for both Singer and SGC this year.
Okay. And KBJ Capital, the JV.
KBJ is apparently getting back to profitability, helped by Samsung Finance Plus and working more closely with other group partners.
And finally, JAS Asset, the property arm.
It seems J was hit by interest costs and some taxes in Q1, but they've made adjustments and expect it to improve and return to profit later in the year. So yes, some definite bright spots. But the sources also bring us back to some overarching group-level challenges.
Right. Things like e-commerce competition, changing consumer habits, tech security. Those are ongoing battles for many businesses.
And the NPL risk, even with lock phones seen as controllable, is always there as loan books grow.
And that funding challenge we touched on earlier, the bond market issues.
That seems quite critical. Based on the KGI source from Feb 2024, bond market volatility makes issuing new debt harder and potentially more expensive.
And the group needs continuous funding.
Yeah, the source mentioned around 6 billion baht in debenture redemptions due just in 2024 for JMT and JMART combined, plus funding for new projects like J's Assets Malls. Since JMART's debt is apparently 60% bonds, trouble in that market really matters.
What about JFinCoin, their crypto venture?
The strategy seems to be about building demand by using the JFin chain within the group more. But they do acknowledge the coin's price tends to just follow Bitcoin and the wider crypto market trends.
And interest rates. Lower would be better.
Definitely. Lower rates would help ease their finance costs across the group.
Finally, that boiling frog economy idea. How does that play out?
It captures this slow economic drain, right? For JMT, it means more NPLs become available to buy. That's the good part, the supply. But the flip side is it makes it harder for existing debtors to actually pay, hurting collections.
So they need to keep buying new portfolios.
Seems so. The sources suggest that while they price new NPL purchases based on current conditions and existing portfolios are still profitable, they need that flow of new acquisitions to keep the business ticking over.
Okay, as we wrap up this deep dive, let's touch on some final thoughts and personal perspectives that came through in the source material.
Yeah, there was an interesting positive angle presented on JMT's role, the idea of it being a Thai company managing Thai debt.
Keeping the money circulating locally, rather than foreign companies buying up the debt.
That was the argument, yeah. A domestic solution.
But there was also a negative side mentioned, social media complaints.
Yes, about debt collection practices. Highlighted as a real, though hard-to-measure risk. Constant negative buzz could damage the brand, not just for JMT, but potentially spilling over to other JMART Group brands.
It really sounds like a tough spot for everyone involved right now.
The sources certainly conveyed that. Empathy for the debtors struggling with COVID impacts, the slow economy, high household debt.
And also for the collectors trying to do their job in that environment.
Exactly. The hope expressed was for negotiation and mediation. Finding solutions outside of costly legal battles that don't really help anyone in the long run.
And the source shared their own personal watch list approach for JMT.
Yeah, mentioned adding it below 17.20, but the key trigger seems to be waiting for concrete signs of the Thai economy improving specifically, seeing public income rise and debt payment ability pick up, which would directly benefit JMT's business.
So that brings us to the end of this deep dive into JMART and JMT. Pieced together from the sources you provided, a complex picture for sure.
Definitely navigating some serious challenges. Profit pressures, the macroeconomy, funding risks. It's a tough environment.
But, as we saw, there are potential opportunities too. Buying NPLs cheaply now, the growth in specific units like Lockphone, Tsukishi Tino, SGC.
And they do have strategies in place, synergy, cost control, potential spin-offs like JAM. They're not just standing still.
All right, so here's a final thought for you, our listener. Building on what we've discussed, and particularly that demographic point from the sources, considering those long-term trends of a potentially shrinking domestic market in Thailand and the clear volatility in funding markets, How might a group like JMART need to adapt its growth strategy beyond just fighting for share domestically? Where else could growth come from?
That's the multi-billion bait question looking ahead, isn't it?
It certainly is. Yeah, a huge thank you for sharing the source material that made this whole discussion possible.
Yes, thanks. It was really illuminating to go through it all.
Until next time, keep asking questions and keep diving deep.